ARM fourth quarter fiscal year 24 earnings. ARM crushed it quarterly, beat, raise, but the stock got hammered because of the annual guide out there. And Stacy, I'm going to kick this off, and I know you have another colleague who covers this from an investment point of view. But listen, this story was very similar to the prior quarter, which was more data center, right? And we just saw Google Axion come online, and this adds to Cobalt and what they're doing over at AWS with Graviton and a couple other folks. Richer, what's called CSS, which is a product that it's not just a royalty, it's not a license. They're actually helping their customers with their solution, taking it all the way even to software verification, validation. They had bigger mobile cores, right? You've seen companies like MediaTek create where it doesn't have any of the efficiency cores. It's all performance cores, and based on their royalty model, that is much more expensive. Now, we also are seeing a shift from V8 instruction set to V9, and ARM pays more money for that. Now, there is a rumor out there that the new Apple M4 uses V9, which gives it via what's called SME a little bit of a performance pop. But you know what? Still wasn't good for the street.
Yeah. Well, so my colleague covers ARM, so I'll refrain from any investment conclusions. But some factual statements. You're right. The stock did sell off. So it wasn't. I don't think it wasn't horrible. Yeah. ARM, by the way, has been really interesting. You know, they had an IPO. I can't remember where it went out, $46 a share or something like that. And
I had a one-day pop of like 50% or something.
Well, and it was even bigger than that because I mean, they had, I think their first earnings, you had like a massive short squeeze on it. And it went to, I can't remember what the top $120 or something. I mean, it was just massive, right? And it's been very volatile since then. The float is not, the float is how many shares are actually out there actively traded. There's a lot of it that's still locked up.
Yes.
Usually after an IPO, there's like a 6-month lockup period before all the other big shareholders can sell. And so when the trading volume is not very high, you can get bigger swings. So it's been very volatile from that standpoint. And it's a very expensive stock. And that was the issue. You're right. The quarter was good. The quarterly guide was good. The full year guide was slightly, I think, a little below on revenue versus the street. I think EPS was a little above. But I mean, I don't know, stocks was, where was it, 68 times earnings or something like that. It's just expensive. So expectations were high and it wasn't quite enough. Like that's it.
Yeah.
I don't think it was anything more than that. And I doubt that anybody's view on the company really changed one way or the other based on their earnings.
There's another
number of like the tailwinds potentially that they have going for them. Right?
Yeah, this seems to be another one of those with all the excitement, enthusiasm about the new NVIDIA flavors. How much was ARM going to kind of indicate its acceleration? You know, we both, I think, Pat, you talked to Renee. I talked to Renee. I mean, he was beaming. He felt really good about the result. It was a guide. I mean, there was a couple of deeper things on there. The profit, I think, almost all the profit in the quarter came from it actually came from a subsidy. There was like a tax break, 177.
Oh, I'm not close.
Yeah, and that's okay. Fairly enough, because, you know, I was leading with the headlines a bit myself. I got underneath it, you know, put something out on Twitter, got some, you know, person that was doing deep technical analysis started yelling at me about it. Because, you know, all I'll say is this, Stacey, is everybody starts scrutinizing the way companies get to their adjusted number. We will never have a conversation again about an earnings report because from everything from taxing to depreciation to the way people make these numbers hit, we could scrutinize every one of these reports, or we just go back to GAAP. And only talk about GAAP.
I only have one company in my coverage that does GAAP reporting. So they all report GAAP. I only have one company that doesn't do any sort of pro forma adjustments. It's Texas Instruments.
Yeah.
They do straight GAAP. Analog Devices and some of the other guys, my semi-caps, they do a pro forma, but they include stock comp, at least in the numbers.
Yeah.
And I've got a number of others that exclude, most of the others exclude stock comp. A lot of them that do acquisitions will exclude amortization, which is fair maybe. But you kind of have to know like what you're comparing. If you're just comparing on one multiple to another, it may not necessarily be apples to apples. That's true.